Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. And for those who are new, welcome to the Daily Gold YouTube channel. Thank you so much for tuning in and joining me on this Friday afternoon, August 29th, 2025. And it is the weekend ahead of Labor Day. And I do have a purple shirt and a purple and gold tie on to celebrate the official start of the college football season. I'm very optimistic about my Huskies. They're a major dark horse this year. I wish you and all your teams the best of luck this coming college football season. That aside, I'm here to give my regular weekly update and outlook on precious metals. And boy, what a week it was. We had gold and silver stocks, the ETFs, up about 5% on the week. Silver up about 2% on the week. Gold also up. It was all punctuated by gold breaking through $3,500 an ounce today and officially breaking out of that consolidation. Does that mean we're about to see another big leg up? Well, let's get to the charts and let me give my opinion. So starting off here, we have the market overview. We're looking at 5 or 5.5 months here, really, of various charts. And we're looking at bar charts. So first moving average is the 50-day moving average. Lower one is the 200-day moving average. So as you know, I use stock charts, and this is the spot gold price. So this is lower, but it has broken out. You can't quite see it here. It did break out above resistance. Moving on to silver. Silver did close above 40 in the futures market, the continuous contract, but in the spot market, just a little bit below. But we can see here the multiple bounces above the 50-day moving average. This is bullish. This should continue up through 40. But here's the thing I really like, gold against the stock market. I talk about this all the time. Here we can see the 50-day. We had this huge move higher in the spring, then a correction. It's been trying to stabilize. It's been held below this 50-day moving average here. But here's the 200. So nice bounce here off the 200 and then scaling along it here, finally pushing up the last couple days. This is the first close above the 50-day moving average. You have to go back to May. It's transitioning from bearish. It's going sideways, should eventually go bullish. So if this moves up like that, that's going to be very good and give some sustainability to the breakout move that we saw today. Now, stock market, not doing a whole lot, but as I said, miners very strong here, even today. Nice move in GDX, GDXJ, SILJ there. But I want to look at each in detail, so we'll get to that. So starting off, again, here is gold. The spot price, daily bar chart here. Here's the 150-day, here's the 200-day. And I was really hoping with this consolidation, because of gold's history, that we would see gold consolidate and come back and get really close to these moving averages. Doesn't look like that's going to happen at this point. This breakout, I'll get more into this in the next slide, but this could take us to 38, 3,900. I don't think this is the move that takes us above 4,000. Now, gold against the stock market, as I noted, nice rebound here above the 200-day, scaling along it here. Now it's pushing higher. This, by the way, this was the breakout, the previous resistance, but now support of this major breakout of a 4-year-long base in March. So really love the action here. This should continue to push higher. This is a key level, 0.54. We want to see a strong move above that. Not quite there yet, but it's looking better at this point. Now, getting into gold futures, we can see here, as I noted, close above 3,500. Really nice consolidation here. The only problem is gold is just so far above the 200-day moving average that I don't think that this breakout is going to take us through 4,000. If this would have continued for a couple more months like that, you have the 200-day moving average up here, then I think we could see the market move above 4,000 at that point. But because of that, and because it's already so far extended above the long-term moving averages, I think we just get a move like that and then probably another correction after that. So we have to be careful about getting too bullish on gold at this point. But you don't want to get bearish because the market has consolidated for 4+ months here, and it is a breakout. So you don't want to fight that right now. The odds are this is going to move higher to 3,800, 3,900. And 3,500. Okay, so moving on, let's look at silver. So here's a spot chart of silver. We noted last week, we had a couple weeks ago, we had another successful test of the 50-day moving average, and it's rising. So look at this. Test here, the moving average is rising. Another positive test here. So that shows a strong trend. So love to see that. So again, this is a spot market. It should move above 40 next week. And as we noted, this breakout here, this projects to 41 or 42. Now, moving on to the futures market, again, I've talked about it. You had a beautiful retest of the breakout here in late June. Higher low here, higher low here. We already showed that to you on the previous chart. But we can see here in the futures market, the continuous contract almost at 41. So that's what we've been looking for. Measured upside target from this breakout of 41. But when you look at the weekly and the monthly chart, and I apologize for not putting the monthly in here, but you can see that there is resistance in the 42s. So 42 is a spot where this move could slow down or pause. Now, let me talk about the Daily Gold Premium. For those of you that have subscribed, thank you so much. I really appreciate your business. For those of you that own juniors and you own minors and you're looking for more guidance, expert analysis on finding those best companies that really have huge potential, we do offer that at the Daily Gold Premium. Head on over to thedailygold.com/premium. You can sign up there at the bottom of the page. And every week we have a top 10 company table that we publish. We also have a watch list table that we publish. We also have a top 10 silver company table that we published a few times. So you can quickly see what's in our portfolio, the stocks that we own, the stocks that are on our watch list, companies we generally like. And we are looking for the highest quality companies that have the most upside potential over the next several years. We are looking for juniors or even larger companies that have potential to 5x or even 10x in the next couple of years. So that requires finding companies with assets that the market really wants and buying them at good values and then holding. So that's what we do at the Daily Gold Premium. We'd love to have you come aboard. Those of you who are subscribers, thank you so much. It's because of you that I get to do the work that I love to do. Now, moving on, let's talk about the stocks. And this is interesting because gold and silver short-term, they do have upside, or I should say silver short-term has more upside to 42, a little bit more upside. Maybe it can touch 43. Gold, as we noted, could get to 3,800, 3,900. But the stocks, they're getting overbought. And I'll talk about that more after looking at the silver stocks here. But clear breakout here in the large silver stocks, as we see the silver juniors here, SILJ, they are also breaking out. But this breakout here in the large silver stocks, you have a potential measured upside target of, let's see here, of about 75. So there's still a ways to go for this breakout. But if you look here, 65, silver stock should run into some overhead resistance here at 65. So that's a little more than 10% from where we are here and now. So they pop up like this, and maybe they pull back a bit like that before moving higher. So this is a huge breakout in the silver stocks, the large ones. The silver juniors have joined in. They close this week, a weekly breakout. That's a new 12-year high, breaking out of a 12-year long base. But this could be a spot where this really strong move just makes an interim short-term peak. So moving on, I do want to talk about the gold stocks. This is just beautiful action here. This is 4 weeks in a row of great gains, closing at the high of every week. In the measured upside target from this breakout here, I believe I had 63.64. So we are there right now. GDXJ, the measured upside target for this breakout, comes out to about 81. So we're just about there. GEOX, I remember mentioning the mid-50s. So we're there right now. Very strong, but we are at measured upside targets. Now, this is really tricky, and I'll get into why. Very short-term breadth indicator here. The advanced decline line here for GDX. Here's GDX. And oftentimes the GDX advanced decline line is a leading indicator for GDX. And the advanced decline line is a great leading indicator because it measures the cumulative participation in GDX every day. How many stocks are going up versus going down, and then adds it to these previous cumulative totals. And so in any market and any sector, the advanced decline line serves as a trusty leading indicator. Now, I am getting concerned about where the gold stocks are, but here's the advanced decline line. There's no divergence here. So this is still very strong. So that is still a good sign for the very short term. But that being said, let me mention a couple things here that are a little concerning. So this is a monthly chart of the Huey Gold Bugs Index, and here's GDXJ. Now, something we have to understand about the Huey Index is basically, it's GDX but minus the royalty company. So GDX has been a stronger index than the HUI because it has a very strong royalty companies in it. So the Huey is just looking at miners. We're just looking at gold producers. Now, I believe the target from this breakout here was 500. I think I mentioned it a couple weeks ago. So this breakout, the target was 500. We're at 515 now. It's up 21% this month. That's a huge move. But if we look back here, again, this is a monthly chart. So these are potential significant resistance levels here. We can see right here up to, call it 500 to 520. So this is an area where this move could definitely stop. Now, looking at GDXJ, is there a similar area? So close at 80 today. This red line is at 85. So if we go back here, we can see here the underside of this action here, resistance around 2010 right here at 85, then a little bit from over here. So close at 80, major resistance at 85. Close right here, it's in the area of major resistance. So this is definitely a short-term concern. Now, let's talk about breadth, because I've been hinting at this in the last couple videos. So this is GDX. Now, this breadth indicator, there's many, but this is one of the most important. So we're looking at new highs divided by new lows. And so here we have the 20-day exponential moving average of this data, and here we have the 10-day exponential moving average of this data. So the lines here are the moving averages. And we can see this is the raw data from every day. So what we see here is that today, 71% of GDX made a new 52-week high. Now, the last time that happened, you got to go back to right before this peak right here. Now, if we look at the 20-day exponential moving average, that's at 31%. So look how high this is. This line shows where 31% is. So this is really close to the 2020 peak, the 2016 peak. Here's the 10-day exponential moving average. So this is up at 39%. And, we can see where it was here. It looked to be a little higher at this peak and a little bit higher here. But when you look at spikes on an individual day, like we can see here, this was a spike over 80% at the end of July. Look at that spike. This was a spike too, also in July. And what's interesting is if you look at a lot of these daily spikes and you put a vertical line here, like this peak here, that was a daily spike right here. A daily spike in the new highs right there at that peak. Now this peak in October right here, that was this peak right here. That was an interim peak in the sector, but this corrected. The market was so strong, gold went sideways for 4.5 months. In miners, so much money was coming in that they basically went up. They did a bullish running correction during that time. So when you get an individual reading like this, the market can peak that day, or it could peak 3 days later or a week later. But this breadth data is really hot. And so this is really concerning. Now, the nuanced look at breadth data is that you want the market to have strong breadth. That's a good thing. But it's a good thing when you're at the beginning of a market move or you're in the middle of the move. When that move has been persisting for a while and the breadth is really strong for too long, that could lead to a peak. And that's what we saw here if we're looking at the 20-day exponential moving average. And so we are coming into a similar level now. Now, this doesn't mean that the market is about to do the same thing it did here and here. We're in a completely new market. Gold has broken out of a super bullish cup and handle pattern. We're in a new secular bull market. So you have to keep that in mind. But that being said, we are coming up probably in the next couple days or week on an interim peak in the sector. So the strong buying that we're seeing here, this is not the start of some huge move. This is the end of the move that we've seen since the beginning of the year. So that's my thinking. In the next week or so, we're probably going to see the market make an interim peak, and it's probably going to correct for at least a couple months, maybe more than that. So I'll discuss that more in future videos. But that's all for this video. Let me know what you think. Leave a comment. Would love to hear from you. Thank you so much for the support. Really appreciate it. Hope you all had a great week, and hope you all have an even better weekend ahead. I'll talk to you guys again next week in Macro Mondays.